Good morning, trading world. It is September 2nd, 2022, 8:13 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the SPY. The big event today is the employment situation at 8:30 a.m. This monthly measure takes into account production across sectors to determine the overall strength of the economy. Strong employment growth suggests a growing economy, which is conducive to a stronger demand and higher prices, causing more inflation. The Fed may be inclined to raise interest rates because of a strong number. So in short, if this number exceeds estimates, stocks fall, bonds fall, and yields rise, along with the stronger U.S. dollar. If missed, stocks will rise, bonds will rise, and yields fall, along with a weaker U.S. dollar. Either way, it's possible to see a 3 standard deviation move today, or between today and Monday, up or down. That's like a 6.0 earthquake on the Richter scale. I know you hear me or other traders talk about standard deviation. It's just a measure used to quantify the variation between a set of data values. Think about it this way. Our expected move for today at yesterday's close was 5.26. This is one full deviation at 5.26. So a one full deviation up move would put us at 401.68. A one full deviation down would put us at 391.16. Now I said we could see a 3 standard deviation move. So let's play it all out. A full 2 standard deviation move up would put us at 406.94, and down would put us at 385.9. Now a 3 standard deviation move puts us at 412.2, and down could possibly put us at 380.64. Keep those in the back of your mind for today in case things get off the rails and you're looking for where we might possibly go, and you say, oh, it broke the queen or king support. Keep these estimates in mind as places where we may wind up. Let's get to the key levels to watch for the day. All right, I'll try to rush through this because I'm getting pretty close to the employment situation, and things are going to get crazy around that point. All right, key levels for the day. On the resistance side, we have our jack resistance at the 396 to 397 level. Queen resistance 398 to the 399 level. King resistance is big. It's 400 all the way up to the 411 level. On the support side, we have jack support at 395 to the 394 area. Queen support, we have 393 down to the 390 area, and then king support 389 all the way down to the 385 area. The main thesis for today is bearish, closing below the 396.42 with a projected target lower between 395 and 387. The alternate thesis is bullish, closing above the 396.42 with a projected target high of between 397 and 411. The current major channel we are in is 397 to 379. The major channel above that is 397 up to 416. All week I have been dropping hints to expect a more explosive alternate thesis. Today, let's take out alternate Just be prepared for the explosive move, because the employment situation makes this almost a binary moment. Even though the thesis says one thing, keep the standard deviation numbers in the back of your mind as to how crazy things could get today. Now, let's get to the scenarios of the day. All right, our first and most probable scenario is going to be our expansive range day structure. We could have an initial pop up after the employment situation, then head down for a majority of the day. The only thing that doesn't make this a trend day is that we're going to cross over the previous close back and forth, maybe once or twice. So that gives us this expansive range day structure. There's also going to be a vice versa, because this is such a binary event. There could be a vice versa where we pop down first and we end up going up in a bullish fashion the majority of the day. So be aware of that as well. All right. Our next scenario is going to be our trend day up. We open gap up and start with a fade back toward the previous close. We find support on or before that previous close, then begin the uptrend for the day. We find midday chop around either the possible queen or king resistance. With the job numbers today, this trend day could turn into what's known as a super steamroller day, where we could continue almost straight up with an impossible angle. So be on alert for that as well. All right. Our last scenario is our rounded reversal day type structure. We could get a continued push higher toward the jack or queen resistance area and find midday chop around either the queen or king resistance area before spending the same energy we use going up to come back down the second half of the day. There may be a rare change to the rounded reversal day type structure, and that is where, with such an explosive move early, based on the 4-hour chart, we could hit an area that will kind of just fall out around that lunchtime chop or midday chop. And instead of us chopping sideways, we could actually possibly fall back a good ways before finding support and then rallying back for a good portion of the day. Now, if this happens, this kind of speaks volumes to what to expect on Monday. It is quite possible that we come in and whatever we didn't see on that 3 standard deviation move, we get on Monday with a big gap. So that is going to be something to keep your eyes on, pay attention to. Like always, our most important job as a trader is to protect the capital that you already have first. Then we do that by knowing and understanding the risk that we have associated with each position and managing that risk in accordance to our account size. This is going to be a crazy day. This is going to be a crazy few days. So be very careful. Stay on your toes. Stay alert. I did see that we had some overhead imbalance, but with with a big gap from the employment situation, that could wipe that out quickly. And then from there, we're off the cuff, and there's absolutely anywhere, there's no rhyme or reason as far as where we could be headed from that point. So even more of a reason that you have to stay on your toes today and make sure you have your risk in check. As always, wishing you a positive trading day. Hope you have a great one.